Oh, the cliches. Like what a difference a day makes. Oh my goodness. It's incredible. And I always say risk happens fast, but markets now are moving faster than ever before. We're going to try to break it all down and we'll talk about who is back. And it's not just one or two things, it's quite a number of things. And we'll talk about a whole bunch more. We'll look at Bitcoin and crypto and money and trends and macro, and we throw everything into the Friday Fire box to get a handle on exactly what's going on. So thank you all for coming. Big shout out to Shoni, TND, K8, B-Man, and Modo. Thank you all for coming. Let's get into it. Not financial advice, of course. And Priscilla, by the way, it's great to see so many ladies now in Patreon. Best time to have encountered James and this Patreon community was 5 years ago, and the second best time is now. I'm so thankful to be here. Yes, we did enjoy some good dips over the last day or so, but it's rocky and we don't quite know if we're out of the woods, but things are looking a lot better than yesterday. By the way, last week, this time Friday last week, I shared this prescient video called Market Bloodbath. And it was a bloodbath. Anyway, let's get into sentiment and signals. First of all, we fell as low as 5 on the fear and greed index for crypto. Now it's at 9. And we know when fear is that high, it's typically a good time to buy. Stocks are moved into fear. They were neutral last week. Now they're fear this week. So not much happening there. Let's talk about Bitcoin and crypto first. February down 11%. Bitcoin lost $10,000 yesterday. It rebounded $7,500 today, but still we are down. It's not pretty out there. But, you know, is it dead? A lot of people are hoping for that $15,000 buying opportunity. I don't think we're getting that low at all. Now, as I keep saying, it's all about money flow, so we keep a close eye on the ETFs. And yeah, so far it's been another horrific week for the Bitcoin ETFs. We've only had 6 positive days this year so far, and lots of red days. But on balance, it's not cataclysmic. I do expect the ETFs to suck in a lot of cash today, because the so-called advisors will be telling people to buy the dip. That's the buzz. Even non-crypto people today, I saw on Twitter, tons of them, they went out and bought Bitcoin today. Yesterday, we had a bunch of people become whole coiners for the first time. They never thought it was possible, but they jumped in with both hands. So it's interesting. Again, I expect positive ETFs today. And ETFs were red for Ethereum too. Another red day yesterday. Pretty bad, about 80, 90 million out. But Solana ETFs, despite the bloodbath yesterday, they were still positive. Who the hell is buying these Solana ETFs all the time? Lots of gentle stacking is happening, which I find quite fascinating. Hopefully we'll get to the bottom of that soon. Now, yesterday, could it be construed as a black swan day? That's one of the things that I keep a close eye on. I track all the black and gray swans over time in history. And yes, if you look in terms of volatility, yes, we had a black swan day yesterday. By the way, volatility was higher yesterday than during the poop show of 2021 with all the fraud and all the other garbage that happened. It was worse yesterday than 2021. We had a 5.65, I think, Sigma drop, the most statistically significant price move in Bitcoin's lifetime ever. And this level of volatility has only happened close to 4 times before since 2010. We're talking 16 years. The event we had yesterday happens once every 1,500 days in its history. Call that once every 4.5 years, almost. So again, it was a nasty, nasty black swan day. And by the way, if you survived it and you're here and you're alive, that means you can take anything, because that's as bad as it gets. Anyway, volatility is back. Another view of this is the Bitcoin implied volatility. It's at 75%, highest level since the ETFs ever launched. And it's also higher than gold volatility. And many believe that volatility is vitality. So enjoy it. It's kind of scary when it happens, but it's back and it's good, because if there's no volatility, it means nobody's interested in it. Now, sentiment is at bear market 2022 levels. A lot of chatter about, is this the bottom? You know, is this the top? Where do we go from here? How bad are things? One of the things, and I keep saying again as well, one of the reasons I'm very excited about the future, despite what happened yesterday, is what gold did. We used to always talk about Bitcoin getting to the market cap of gold because it's superior in every way. But if it does, it means the price of Bitcoin is going to north of $1.7 million of Bitcoin. We'll see if that happens. We don't know if anything will last that long, but either way, sentiment is in the toilet, same as November 2022. And that typically means sort of bottom or buy. Anyway, we don't know. Everything is different this time. The 4-year cycle is dead. There's been no alt season per se. And precious stuff, scarce stuff in the age of AI is important, and Bitcoin hasn't moved yet. So we shall see where all this goes. Also, another interesting thing to note too, I shared this before, this from James Check, but we are far closer to the bottom than the top. A lot of people think we're going back to 15,500, the November 2022 low. No, we're kind of rubbing along the bottom now. What has happened this time around is the top wasn't there. We didn't have a new blow off top. We don't have a high roof, and therefore drawdowns will be less. And I did talk about yesterday's video about how we had record dip, record speed, this fastest ever that Bitcoin lost 50% of its value. And a lot of people consider that with the ETFs and with the treasuries and all these types of vehicles, that the drawdowns will be less intense. You know, we should expect, if there were no ETFs, probably a 70% drawdown, but we got to 50% yesterday. So again, we're very, very close to the bottom for those who are afraid. And maybe that's why there's some clever people that never touched Bitcoin before. They bought for the first time today. Interesting. And this is from Bitwise. Guess who else came in and bought the dip too? Not just people who are very foreign to crypto, but the hedge funds are back and they have jumped into digital assets. This is from Bitwise. As the Bitcoin price tanks, the hedgies are waiting there to put their risk on. So they're into, which is good for the space. So that's all regarding kind of crypto for now. But let's talk about some of the other fire that's happening. Let's talk about markets. Tech rips back. Literally, I always talk about how every day many assets go up 3%, 4%, down 5%, whatever. Today, 8% is the common number. NVIDIA up 8%, Broadcom up 8%, AMD up 8%. We got to snag some AMD this week as well on the cheap. A lot of other good stuff out there. Amazon, of course, down, which is a little bit surprising. People are worried about CapEx. Google down. People worried about CapEx. Meta down. But the rest of the space is up. Tesla up 4.3%. It'd be funny if it was 4.2%. I learned what that meant a year ago, by the way. And everything else is kind of interesting. By the way, it's so hilarious. I still find it funny that Tesla is stored within consumer durables. It's like they sell rubber sinks. And it is probably the most prominent AGI play on the planet. Hilarious, but that's the world we live in. Very backwards. Anyway, moving on. Speaking of Tesla, these are Cortex II Megapacks. Shout out to Sawyer Merritt. And they are installing, I think it's 160 Megapacks now on site. You can see they're double stacked here, maybe even more than that, if anybody took the time to count. It's a lot. And this will train Cortex II, which is a 0.5 gigawatt computer to train two things: Optimus Brain, Optimus Robot, but also the cars that drive themselves all over the planet. This is just incredible. This is just to smoothen the power source. That's it. Forget about the number of CPUs, all the cooling systems, all the transformers. I think they're the transformers there we see behind. But it's incredible. And it's only a matter of time before data centers realize we need to get these Megapacks too. Again, infinite demand for this product, which is very important to Tesla, but not even considered by many. Anyway, speaking of other AI assets, NVIDIA, this is a cool chart. The reason I want to bring it to your attention is you can see here that while the price keeps going up, the multiples keep shrinking. They're down near low levels, which means the earnings growth is through the roof. This is what you want. This is what's very interesting with companies before they go on to an absolute rager of free cash flow explosions and profitability and everything else, like I believe Tesla is getting into in 2026 and 2027. But these multiples here are shrinking. In fact, the NVIDIA PE ratio is less than Walmart, believe it or not, which is a grocery store. Anyway, that stock is also ripping, by the way. Thank you, Nick, up there in Canada. And speaking of NVIDIA, too, they had to stall their gaming sales, gaming chip, something, for the first time in over 30 years because they got no memory to stick in it. The data density is trying to keep pace with the generation, and they are saving their memory for the AI chips, not for the gaming chips. So if you are a video gamer or need to buy computers, again, we are seeing massive memory shortage, which means the price of these things is going to go to the moon. If you can find a way to, if you need a new gaming box or whatever, and they still have them on the stores at a cheap price, maybe grab it now, because over the next year or so, they're probably going to get a lot more expensive. Not gaming advice. I don't play video games, never have, never had the time. But anyway, and this is another interesting story as well. And I just find this incredible. I'd love to meet the heads of strategy for these companies. These are the latest EV write-downs for just 3 of the big car companies. Ford, 19.5 billion. I'm going to call it 20 billion between us friends here. General Motors, nearly 8 billion. And Stellantis today booked $27 billion in write-downs from abandoning their EV plans. You add all this together, you have way north of $50 billion flushed down the toilet as these legacy car companies go back to ICE combustion vehicles. Now, we all know the world is moving towards EVs and autonomous EVs at that. But what's also really weird is you've got Elon Musk and Tesla. They're abandoning making their luxury cars to focus on building robots. So you got the traditional car industry going backwards in reverse at 100 miles an hour into an abyss. And then you got Tesla, the company that destroyed these companies, sent them off the cliff. Now they're leaving the car space to go full on into autonomy and humanoid robots. And the distance is only going to get ever bigger between these people. Anyway, it's interesting to watch. Let's speak about AI. Very important. This is my AI Capex table for 2026 so far. Every time I get a new data point, I plug it in here to the sheet and I share it because this is the amount that these companies plan to spend. If you look at Tesla dropping $20 billion, that's 10% of what Amazon want to drop today. And that's probably why Amazon is tanking right now, because they announced their CapEx plans and the market doesn't like it at all. Not at all. Anyway, the point about this is it's still a good time to invest in AI stocks because the money that's coming into the space, like think of all the people that plug in the optical networks like Marvel, NVIDIA selling chips, all the other players that are out there, AMD, etc. They're all going to make a killing and continue to do so for quite some time because this is a race to AGI. The group that gets there first wins, and they all know it. But it's just going to be a crazy time too. Anyhow, speaking of AI too, I talk a lot about OpenAI and how they've fallen so far behind. Well, Anthropic just smoked them yet again. This is interesting. Superintelligence is now being packaged for industrial scale deployment. Anthropic released Claude Opus 4.6. I think it has a 1 million token window, and it smoked ChatGPT 5.2. It also has the new record for humanities last exam at 53.1%. By the way, notice XAI Grok is not included here in this group. I would believe that XAI would probably be on par with 4.6 or maybe even superior. We'll find out. Hopefully somebody will do that benchmark test as well soon. But everything is happening so fast. If you dig into humanities last exam, have a look at some of the questions on it. Oh my goodness, it'll make your brain fry. But now AI can completely smoke these exams better than a human. And shout out to France. This is the French president, Emmanuel Macron. And he just announced France is investing $30 million into AI because he wants France and the rest of Europe to be ahead of the United States in the AI race. Now, kudos to him. That is fantastic. And also part of the money as well will go to climate change initiatives, which is great. Maybe half of it will go towards climate change initiatives. Meanwhile, India and China burn all the coal they possibly can. Anyhow, that's a separate issue. But $30 million, by the way, you have one AI employee at Meta making $100 million, and you've got a country of France going to invest 15 million. And then look at the capex table I just shared of the money actually being invested. We're talking hundreds and hundreds of billions, actually trillions. Trillions are being invested, and France is going to invest, well, after the climate change initiative, maybe $15 million. They're not going to make it. What's wrong with these people? What's wrong? They need to invest a lot more. And I do want Europe to catch up with the AI race, but not with leaders like this and not being held hostage by these climate change initiatives, which are all a scam, as we know. And speaking of, did I say scams? I didn't mean to say that. That's a Freudian slip. Sam Altman, he was asked in an interview, does he believe in space data centers? I did warn you, Friday Fire is always when I get spicy. So it's my little release for the week before Friday night. Anyway, and they asked him, do you expect space data centers to happen in 3 years? He said, nope. 5 years, nope. 10 years, nope. Basically, he doesn't believe they're going to happen at all. And if you've been anywhere other than under a rock over the last year, space is red hot right now. Not just AI, but space. And we're running out of place on Earth to run AI data centers effectively and efficiently. I showed you a bunch of data points in this video so far today regarding megapacks, how much is actually required on Earth to make this happen. But this takes us to space. So Sam says space data centers are not going to happen. And space enters space. Elon did an interview yesterday with Dwarkesh, the podcast. It was like 3 hours long. And he believes, this is kind of where it gets interesting, that in 3 years, AI will outgrow Earth, and both in power and in semiconductors, and factories will become bottlenecks. So AI has to move to space. Data centers have to move to space, where solar energy and power is abundant, which is a bottleneck, and cooling is also abundant. It's far easier. It's some technical challenges there, and you need a lot of cooling to make it happen. But the point is, it's going to happen. Again, within 3 years. And that's the big play around SpaceX. And that's why a lot of people are very excited. I think it's going to take longer, maybe 4 to 5 years. But either way, pretty incredible to watch. Now, people on X are fighting. They're saying, oh, SpaceX is going to kill Tesla, and oh, Tesla's going to kill SpaceX. So I've been thinking about this for 6 weeks, and I've made multiple videos on this topic. And I tried to put together a graphic with the help of AI to explain how it all works. So Tesla builds the AI chips that are going to go into space. Tesla are also going to build a terafab. In fact, Tesla and SpaceX might build one together because they both need the chips. XAI will build the Optimus brain. That's XAI, which is part of SpaceX, etc. And then Tesla robots, the Optimus robot, will build the hardware. Whether it's in space or on the ground here, that's what's going to happen. In fact, a lot of theories that the Optimus robots will be designed to work in terafabs, in very clean environments where humans would just dirty up the place. They might have robots doing that as well. And then SpaceX will launch everything into orbit. So it all kind of fits together very nicely, but it's important to understand the end nodes are where the action's at, where the pricing's at, where the value is being created. And that happens both at the semiconductor level, also the Optimus robot level, also the cars that drive themselves. That's where the value creation happens. And for years, I remember back in the 90s, they used to analyze things like DSL stocks, if you remember them, high-speed internet. They all went nowhere because there's no money in pipes. No money in pipes. All the money is in the end nodes, everybody. So just remember that. So, and either way, they're synergistic. they'll both benefit. But I think space is a little further off than we might imagine, 4 to 5 years. In the meantime, watch robots, watch autonomous vehicles, watch silicon creation within Tesla and the Terafab. That's where all the action is at. Let's get into a bit of macro news. First of all, everybody's talking about ISM, PMI, and Bitcoin as a leading indicator with correlation with Bitcoin. But this is a cool little chart from Andrea Steno. Nothing, again, many people believe that Korea is always an early indicator for the action that's going to come to the US. When South Korea exports a lot of stuff, the West follows, and their ISM PMI goes up. And according to this, the US ISM should hit 60 next, because the light blue line will follow the dark blue line. Korea is the canary in the mine, and they are on fire right now. Watch the US pop, and nobody is ready for a US PMI of 60, which will boost everything. Also, a little bit of sad news too. AI is eating tech jobs. The irony is not lost to me. The tech people that build the AI are losing the jobs because of the AI. Anyway, tech employment is declining as a share of work as AI agents and AI itself gets started automating a lot of work. Again, be careful out there. The trend is clearly down from the peak, which was around 2022, and down ever since. The world is changing very fast, just like the price of our assets. And finishing with meme du jour, I maintain that Tesla, even though it's underpriced right now, and then XAI and SpaceX are the hottest thing in the room, the shiny thing that gets all the attention, I do believe, shout out to Sanjay too, that Tesla will be the bigger fish initially. Maybe after 2030, 2032, space is when everything is up in space. We shall see. So that is Friday Fire's story. Thank you all for coming. Big shout out to, once again, Moto, B-Man, AR1, Ron, Halekela, Nick M, Buckhorn, DBF430, Full Stack, Broccoli, and QC Coiner up there. I think in Quebec Coiner. I always assumed, drop a comment if I always assumed QC Coiner is from Quebec. I spent a winter working there for about 12 weeks, a long time ago. Decades ago. And it was so cold. Anyway, if you're up there in Quebec, enjoy. I hope the weather's not too bad. And I hope you all learned something today. Thank you all for coming. Talk to you soon. Bye-bye.